You're looking at the wrong bomb. Right now, every mainstream media outlet south of the border, and frankly too many up here in Toronto and Ottawa, are obsessing over the July 2026 joint review of CUSMA, or CUSMA, as we rightly call it in Canada. They're running their clocks down to the wire. They're telling their viewers that because of the notorious sunset clause embedded in the agreement, if Washington, Ottawa, and Mexico City don't sit down, smile, and officially confirm their commitment to the deal at that 6-year review mark, the entire North American free trade framework will automatically begin a countdown to termination. They're treating this July 2026 date like an unexploded ordnance sitting in the middle of the continent, waiting for a diplomatic savior in Washington to defuse it. They think the tension is about what might happen, but they're blinded by their own noise. The explosion didn't happen in the future. The foundation of North American trust was blown to pieces years ago, and the shockwaves have already fundamentally rewired the ground you're standing on. Look closely at the historical timeline, without the amnesia that plagues modern politics. The real hemorrhage didn't start with a future deadline. It started the day the United States weaponized Section 232 of their Trade Expansion Act. Remember that moment? Washington looked us dead in the eye. Their closest ally, their most integrated economic partner, the country that literally helped build the planes and tanks that won 2 world wars, and officially classified Canadian steel and aluminum as a national security threat. They slapped a 25% tariff on our steel and 10% on our aluminum. It wasn't just a minor insult, it was a brutal, unilateral declaration that the American market was no longer a reliable, rules-based partner. It proved that access to the U.S. economy was now a hostile environment ruled by political tantrums and populist leverage. Let's bring this down from the stratosphere of multi-billion-dollar macroeconomics directly to your driveway. Think about that Chevy Silverado or Ford F-150 sitting in your garage right now. You might have bought it a few years ago, running your hands over the hood, thinking it was a solid piece of North American engineering, a safe investment. But the absolute moment Washington normalized using tariffs as a blunt weapon against its neighbors, the economic reality of that vehicle shifted under your feet. Those Section 232 tariffs didn't act like a traditional tax. They acted as a tourniquet wrapped tightly around the shared arteries of North American manufacturing. Auto parts do not cross the Windsor-Detroit Ambassador Bridge once. That's a layman's fantasy. The reality of the just-in-time production model is an incredibly fragile, high-speed cardiovascular system. A raw steel coil is forged in Hamilton. It crosses the border to Ohio to be stamped. It crosses back to Ontario to be machined into a subassembly. It crosses back to Michigan to be mated with a transmission. It bounces back and forth across that invisible line 7, sometimes 8 times before a finished vehicle ever rolls off an assembly line. Every single time that steel frame crossed the border under Washington's tariff regime, it didn't just pay a one-time toll, it absorbed a compound friction cost. That friction isn't theoretical. It's bleeding you dry right now. That replacement alternator or transmission housing you're going to need next month. Its price has permanently spiked because the supply chain was forced to cannibalize its own margins to survive the border friction. And worse, look at your registered retirement savings plan, RRSP statements. If you held any mutual funds tied to North American integrated logistics, rail transport, or border-dependent industrial portfolios when Washington started playing games, you personally paid the toll for their arrogance. The value was silently siphoned off your retirement, not by natural market forces, but by an artificial pressure valve installed by politicians who think global trade is a zero-sum reality TV show. They tell you the crisis is coming in 2026, but the scar in your garage and the missing yield in your pension proves the system was already fundamentally altered. And while the U.S. administration thought we would just take the beating, absorb the losses, and beg for access to keep the factories running, the architects of Canadian industry started operating on a completely different set of mathematics. To understand how Canada actually responded to American protectionism, you have to strip away the diplomatic pleasantries and look at the brutal mechanics of capital warfare. When Washington slapped tariffs on everything we pull from the earth, they assumed it was a simple demonstration of power. They assumed the sheer size of their 330 million person consumer market gave them the right to dictate terms to a sovereign neighbor that physically controls the minerals their future factories desperately require. They fundamentally misunderstood how our mutual economies were built. Sit still and think about this for a second. 7 times back and forth across a border, a 25% tax on raw material, compounded relentlessly over multiple border crossings, baked into the cost of the final product. The hydrodynamic pressure of that kind of economic friction shreds profit margins to absolute zero. You cannot run a heavy industry sector when the cost of artificial political friction exceeds the value of the physical product itself. So, Canada didn't just write an angry letter to the WTO. We retaliated with absolute mathematical precision. Led by the strategic calculations in Ottawa, Canada deployed $16.6 billion in dollar-for-dollar counter-tariffs. But we didn't shoot blindly into the dark. We didn't target things that would hurt our own consumers. We aimed directly at the political lifelines of the specific regions and congressional districts, enabling the trade war. Kentucky bourbon, Wisconsin cranberries, Pennsylvania steel, Florida orange juice, toilet paper from the critical swing states. Every single product chosen for that $16.6 billion retaliation was a calculated strike designed to inflict localized, undeniable financial pain on the constituents of the politicians who thought bullying Canada was a free pass. We weaponized their own domestic political vulnerabilities against them. We forced American farmers and steelworkers to march into the offices of their representatives and demand an end to a war that Canada didn't start, but Canada was certainly going to finish. But the tariffs and the counter-tariffs were just the surface of the water. The real tectonic shift happened deep in the boardrooms of heavy industry and global finance. We realized that you do not build a 50-year national industrial strategy on a foundation that can fracture with a protectionist whim from the White House. The era of blind dependence on the United States was over. We recognized that being the junior partner meant being the expendable collateral. What the United States did by treating us as an adversary wasn't some unprecedented display of economic dominance. From a historical perspective, it was a carbon copy of a catastrophic geopolitical miscalculation made years ago on the other side of the planet. Let's rewind to the year 2010. Following a severe maritime dispute in the East China Sea, Beijing, feeling invincible in its absolute control over the global rare earth supply chain, decided to use its leverage to crush Tokyo. At the time, China controlled over 90% of the rare earth elements essential for everything from hybrid cars to guided missiles. They imposed a sudden, brutal, and unannounced embargo on rare earth exports to Japan. The calculation in Beijing was arrogant and incredibly simple. Starve Japan's high-tech manufacturing sector of the critical minerals it needed to survive. Wait for the assembly lines at Toyota and Panasonic to grind to a halt, and watch the Japanese government crawl back to the negotiating table on its knees, ready to concede territory. But the Japanese industrial elite didn't panic, and they certainly didn't surrender. Instead, they recognized the existential danger of relying on a hostile partner for their economic survival. Japan's Ministry of Economy, Trade, and Industry, BTI, acted immediately. They bypassed Beijing entirely, funneling massive, subsidized capital into an Australian mining company called Lynas. They relentlessly funded domestic research into alternative materials and recycling methods. They absorbed the short-term pain to guarantee long-term sovereignty. The outcome? Japan successfully built an independent, secure supply chain. China didn't just fail to break Japan, Beijing permanently shattered its own global monopoly. By weaponizing their market, China proved they were an unreliable supplier, forcing the rest of the world to develop alternatives and forever losing the absolute pricing power they once wielded like a club. History doesn't just rhyme, it repeats itself with terrifying precision. By weaponizing trade against Canada via Section 232, Washington forgot the most fundamental rule of heavy industry. Ultimate leverage belongs to the nation pulling the critical resources out of the ground, not the nation printing the currency to buy them. Imagine an arrogant man standing inside a highly fortified bunker, furious at the farmer outside who supplies his daily rations. To teach the farmer a lesson in subservience, the man decides to pour solid, quick-drying concrete over the only door connecting his bunker to the outside granary. He might feel incredibly powerful while he's mixing the cement, reveling in his own defiance, but once that concrete cures, the farmer will simply load his trucks and find another buyer for his wheat. And the man in the bunker, he is the one who will eventually starve in the dark, trapped by the walls he built himself. By trying to squeeze us, Washington didn't break our supply chains. They catalyzed our permanent independence. You've been conditioned by decades of US-centric media to believe that severing a mid-sized nation from its primary buyer inevitably leads to collapse. But the herd is always looking in the wrong direction. If you want to know who is actually winning the industrial war, ignore the politicians barking at podiums in Washington and follow the smart money. Watch where global capital is fleeing for safety. In early 2024, Bloomberg NEF released their definitive global lithium-ion battery supply chain ranking. This is the gold standard metric for the future of industrial power. For years, China held an absolute iron grip on the number one spot, dictating the future of global energy, while the United States desperately threw hundreds of billions of dollars in subsidies through their Inflation Reduction Act at the wall to catch up. But when the dust settled, who took the crown? It wasn't Washington. It was us. Canada officially bypassed both superpowers to claim the number one position on Earth for building the battery supply chains of the future. We aren't just pulling raw dirt out of the ground anymore to ship south to Detroit or Ohio for pennies on the dollar. We are commanding the entire value pyramid. We are demanding that the processing, the refining, and the final assembly happen on our soil. The global heavyweights of manufacturing looked at the toxic friction zone that the Canada-US border had become. They looked at the political instability, the unpredictable tariff threats, and the sheer chaos of American domestic politics, and they made a permanent calculated pivot. Let's look at the actual receipts. Take Volkswagen. In 2023, instead of expanding in the U.S. Rust Belt, Volkswagen committed $7 billion to build a massive battery gigafactory in St. Thomas, Ontario. Take Stellantis and LG Energy Solution. They poured $5 billion into a sprawling EV battery plant in Windsor, right across the river from Detroit, pulling the center of gravity back to the Canadian side. And then, the crown jewel, Honda. In April 2024, instead of gambling on the whims of American politics, Honda slammed 15 billion Canadian dollars onto the table. Their objective? To build a comprehensive, closed-loop electric vehicle supply chain right here in Alliston, Ontario. They are constructing everything from the raw cathode processing facilities to the final assembly lines, entirely within our sovereign borders. Add those numbers up. Volkswagen, Stellantis, Honda. That is $27 billion in hard, immovable industrial capital. Don't just gloss over this detail. Let it sink in for a second. $27 billion is never poured into a nation on its knees. It is poured into a nation that is building an impenetrable fortress. Global capital is notoriously cowardly when it comes to political risk, but it is ruthlessly efficient at finding stability. The titans of heavy industry realized that crossing the American border now guarantees a bleeding margin, so they simply stopped crossing it. They are aggressively dismantling their exposure to the American Rust Belt and physically relocating their apex manufacturing capabilities deep into the Canadian interior. We are extracting the lithium, the cobalt, and the nickel from our own soil in the north. We are refining it using our own clean power grids in Quebec and Ontario. And we are assembling the vehicles of the future without just asking Washington for a single permission slip. We aren't just replacing American buyers, we are absorbing the very industrial momentum that the United States used to take for granted. History mercilessly judged Beijing for its arrogance in 2010, a move that broke China's own monopoly. Today, the gavel has already come down on Washington for the exact same hubris. I want you to do something after this video ends. I want you to walk out to your driveway and look at the steel in your truck. I want you to open your RRSP or your investment portfolio and look at where your capital is actually anchored. For decades, we were told by economists, by media, by our own self-doubting politicians that our prosperity was entirely dependent on the goodwill of the Colossus to the south. We were told that if America sneezed, Canada would catch a fatal pneumonia. But look at the reality unfolding in front of you. Look at the massive EV battery plants rising from the ground in Ontario, employing thousands of Canadians in jobs that used to belong to Michigan and Ohio. Look at our global ranking as the undisputed leader in the critical minerals supply chain. Look at how our resources are now tied to sovereign contracts that bypass the erratic nature of the U.S. Congress. Now look across the border. Look at the political chaos. Look at the desperate, flailing attempts to rebuild an industrial base they intentionally chased away with short-sighted protectionism. Look at the inflation tearing through their middle class because they decided to put a tax on every piece of metal crossing their border. The CUSMA review deadline coming up in July 2026 isn't a ticking bomb for us. It is merely a calendar date. If the agreement holds, fine. If the United States decides to play games again and threatens to tear it up, we are no longer terrified. Canada is no longer the junior partner in an abusive corporate marriage, desperately hoping the locks aren't changed when we get home. We are the lifeboat. We have severed the anchor of blind dependence. We have charted a new, sovereign industrial course, and the doors to the fortress are now officially and permanently sealed. The only question left for you, as an investor, a worker, and a citizen, is this. Are you still investing your future in a sinking ship that resents you, or are you ready to man the oars of the lifeboat that we built ourselves?